Hi everyone, this is Accounting Made Simple with Akim. Today I'll be discussing IAS 41 Agriculture. IAS 41 Agriculture. So this standard came to effect on 1st of January 2003, and it covers biological assets as well as agricultural produce. So what are biological assets? Biological assets include living plants and animals like avocado plants, ram, etc., etc. So what this implies is that in any farm or any um, agricultural setting, we have what we call biological asset, which are the asset that the entity or the farmer is trying to grow over a period of time. So that's why we cited the example of avocado plants, or it can also be something like maize plant or any plant. So that's or can also be a living animal like cow itself, can be ram, and all those living animals. So the other focus will also be on agricultural produce. What are agricultural produce? So the standard defines agricultural produce as harvested biological assets. When you have a biological asset for a period of time, you know that okay, you plant some asset and you expect to harvest it in a particular period. Maybe you planted in January, you expect to harvest in maybe in June or August of the same year. So the harvested plant at the point of harvest is called agricultural produce. So the treatment of biological assets and agricultural produce are like the same as far as IAS 41 is concerned. The only difference is subsequent measurement of agricultural produce will be treated as an inventory, because at the point of harvesting the biological assets, we apply the same principle as biological asset, but when we now harvest it, it becomes an inventory. You understand? So when it becomes an inventory, it means that we cease to apply IAS 41. So and that's the reason why we have it here. So you can see IAS 41. The scope of IAS 41 covers basically biological asset and agricultural produce, and also other aspects that the standard covers is maybe there are some grants given by the government, the government grants that are related to the biological assets. Not all grants we're talking about here. There are some grants that relate to, okay, for instance, you have a palm tree or maybe a fruit tree, and there's a grant for that fruit tree, because that fruit tree is not something that you harvest in 1 year. It's something that you continue to take harvest from year to year. So this type of assets are called bearer plants. So the standard specifies that if the government grant relates to biological relates to bearer plants, bearer plants, then IAS 41 would not apply. So the standard further goes further to explain what bearer plant means. States that bearer plants is a plant that is used in the production or supply of agricultural produce. Examples are grapevines, like I mentioned earlier, and also fruit trees, because these grapevines, fruit trees continue to will continue to bear further plants. You understand? Can also be maybe dairy cow, for instance, a dairy cow, because dairy cow would continue to produce milk. You understand? So it's also form part of bearer plants. The standard also says that a plant that is expected to bear produce for more than one period, like I said earlier, that this is not only to be harvested in just one period. It's continuing to bear more produce from time to time, maybe 2 years, 3 years down the line. And also a plant that has a remote likelihood of being sold as agricultural produce, except for scrap sales. So let's talk about the rules of recognition and measurement for both biological asset and agricultural produce. Looking at it, the standard says that at initial recognition, um, a biological asset should be recognized at fair value less cost to sell. Fair value can be maybe at the point of buying the assets, or maybe at the point of buying the item, the biological asset, maybe a price that is payable in the market. That is a fair value. And some point in time when you are trying to now sell this item in the market, what are the costs to sell it? So those costs to sell it will be deducted from it when we are recognizing it in the books. So at initial recognition, the standard says that we should apply a fair value less cost to sell, and also on subsequent measurement of the same biological asset, we should also apply fair value less cost to sell. So there could be differences in the fair value from period to period, because okay, for instance, you buy a biological asset like a ram or a cow, maybe a small cow, at maybe $100 when you buy it, maybe in January, but maybe in June that same asset has become maybe $150 in the market. So the fair value, because that, a plant is expected, the nature of a plant or an animal is expected that they will grow over a period of time. So so the fair value will continue to change from time to time. So when you now say that in June the fair value is now $150, it means that that um, biological assets would be recognized at that fair value of £150 at that point in time. So that is what that one means. As part of the rules of recognition and measurement of biological assets, the standard says that we should recognize biological asset as a line item under the non-current asset, a different line item under the non-current asset. And also for measurement, if it's possible, you also need to understand that okay, before we can recognize an asset, that asset is expected to bring economic benefits. So if it would if it is probable from the beginning that it will produce some economic benefit to the entity, that we should recognize it. That's the first rule. The second rule is that if this biological asset um, can be measured reliably, I mean the fair value of the biological asset can be measured reliably, then we should also recognize it in the books. And also the fact that if the entity controls this biological asset, those three rules are expected to be followed. But in some instances it's possible that the biological asset might not the fair value of the biological asset might not be easily, or maybe the fair value might not be readily available at the point in time. So if that happens, the standard goes further to say that we should apply cost less accumulated depreciation and also accumulated impairment loss, if any. So that is what the standard. But the first thing we need to do is to recognize at fair value less cost to sell. So let's look at the example that I have given here, and now we can show it in the books of the company. So the example says that on January 1, 2023, XYZ Farm Limited purchased 100 rams at the rate of $10 each, and to cost XYZ $1.50 to sell each ram. On 15 June 2023, the company also bought additional rams of 500 units for $12 each, and it will also cost $1.8 to sell each of them. As at the end of the year, which is 31st of December 2023, the current market value for each ram will be $10.50, but it will cost $2 each to sell each RAM. Calculate the value of the RAM at each respective date, as well as the profit or loss on the RAMs. So let me insert here some rows so that we can use that for our solution. So solution, so now we need to first of all note the date. January 1. Date in accounting, date is very, very important. So everything we do, we need to first of all look at the date at each of those dates. So we say that on 4 January 2023, XYZ purchased 1000 units. So units, let me use this place, units bought, price of each unit, and the total value. Yeah. RAM purchased, right, for 1000 units, and $10 each. So price in dollars, and also the value in dollars. So git next. So it will have cost XYZ Limited, Farm Limited, the sum of $10,000 to buy the 1000 unit of RAM. So what is the cost? Estimated cost to sell. Estimated when we are selling it. Cost to sell. We say that it's the same 1000 units, and the cost to sell is $1.50. $1.50. Yeah. This times this. So let's put minus here. Oh, let me just say A, B, A minus B, B, this. So at the point of purchase, you know that XYZ will have debited biological assets with what value? That value will be, let me say debit, this is debit, this is credit. So the value that we'll use here is the value, fair value less cost to sell. That is what XYZ will debit in the books. But XYZ, on the other hand, will have credited bank or cash because the company paid $10,000 to buy those RAM. So there's imbalance here. So it means that there's a difference of 1500, which is the estimated cost to sell. So that will be debited to profit or loss. So at the point of even purchase of a biological asset, it is possible that you have a loss to be posted to profit or loss account. So the difference is 1500. That goes to the profit or loss. That's for the first biological asset. So the second set was purchased on 15 June 2023. Let's use the same template. Copy down the same template, but the unit is different. This one is 500 units. what price was it? I think it's $12 each. 500 also. Cost for each to sell is this. Oh, said thing must have pasted on. I need to insert more rows. Sorry. Insert. So 15 June 15 June 2023. Yes. Insert more rows. Yeah. So on 15 June we said 500, yeah, and 500 also. This one is 12. This one is $1.80. Yeah. So for the first one, we know the debit and credit, so we also apply the same thing. It's very, very simple. Same principle. Debit and credit. What do we debit? We debit the biological asset for the fair value, less cost to sell. Then what will have been paid? We'll have paid $6,000. So the difference also, there's an additional loss of 900. So we have a total loss of 2,400. 2,400 as that 15th of June. So at the end of the year now, if you look at the question, says that as at the end of the year, which is 31st December 2023, the current market value for each RAM will be $10.50, but it will cost $2 each to sell each RAM. So let's now apply that. So let's now, how many RAM do we have now? We have a total of total RAM will be 1,500. That is the first 1,000 that was bought, and the next 500. So fair value, which is what was given, is, I think it's $10.50. Let me check again. Yes, $10.50. This is it. Yeah. So $10.50. Then the total fair value will now be say multiplication. So it will be 15,750. So what is the cost to sell? Cost to sell. Say the cost to sell is the 1,500 times $2. That is $2 was given the question, which is this value here. This $2 was given. So the total value of the RAM that will be recognized, because we need to re-estimate the fair value in the books as at 31st December. So let me put the date here, 31 December 2023. Yeah, December. This is December 2023. So this value of 12 start more rows, $12.50, 12,750 will be the fair value that will be showing as biological asset value in the balance sheet or statement of assets and liabilities. So this 12,750 will be there. But how do we now recognize it in the books? What do we have a further loss or a profit? It's possible we can have a profit. So we now say that uh, fair value of 1000 RAM is in the question, say value dollars. So what is the fair value of 1000 RAM that we calculated earlier? The fair value of 1000 RAM is 8500. What is the fair value of the balance, the remaining 500 RAM? 500 RAM, we have also calculated that. I think that's 5100. Yes, that's it. Oh, so now, what is now the total fair value? Total fair value that we had here is this 12,750. So this is the total amount, but that is not what we're looking for because we already have those values. We want to know whether we have profit or loss. So I think it's a loss. So that is balancing adjustment, which is amount to profit or loss. So here we have this minus this plus this. So we have a further loss of 850. So there's a further loss of $850. So total loss recognized in the books of XYZ for 2023 financial year is the first one is 1500. 1500, that's the first loss, plus the 900 plus 850. So this is what will be recognized in the books, while the fair value of this will be shown as value of biological assets as a separate line item under the non-current asset in the balance sheet. So let's now go to agricultural produce. Don't forget I told you that agricultural produce is the harvested biological asset. So what the standard says is that, note, agricultural produce is harvested biological asset and should be measured at fair value less cost to sell at the date of harvest. So on the date of harvest, fair value less cost to sell would apply. But subsequently, you know that harvested product or harvested biological asset, or which now becomes the agricultural produce, will become an inventory. So when it becomes an inventory, there is need to apply IAS 2, which is inventory. So we cannot apply IAS 41 after the date of harvest for agricultural produce. So that's the difference between biological asset and agricultural produce. So there's an example here. So this example, let's just look at it, how to solve it. It's a very simple example. Solution. Here we have XYZ Limited had 1000 units of grapes at a value of $120,000. And some of the grapes will be due to harvest by 31st December 2023. We don't know the exact value. This exact numbers. We don't know it, but we say that some of them be due to be harvested. So on 31st December 2023, 200 units were harvested when the fair value of each grape is 130. So what is the fair value at the beginning? Fair value at the beginning is, let me say, units, price, and value, just like what we did earlier on. Price also. So we know that the value is $120,000. That was given already, and we know it's 1,000 units. So the price, fair market price would be 120. Yeah, that's it. So the question now further say that 200 units were sold. So no, were harvested. Sorry, harvested units is 200. So 200 units were harvested. And what is the fair value when they were harvested? So the fair value is let me separate something here, because so it's 130, and what is the fair value of the 200? The fair value of the 200 is this. So before harvest, the 200 units must have cost 200 units must have cost must be shown in the books, must have been shown in the books as 120, right? So it shows that there's a difference between this fair value, the beginning fair value, and the fair value now. So it means there's a profit. So when you say you harvest it now, when you measure it at fair value, there's a profit of $2,000. So the fair value of the harvested, you debit biological, no, let me say agricultural produce, with additional. It was earlier on that value was 24,000. So that 24,000 must have been sitting in the books as part of the biological asset. So now you now debit a further 2,000 to it and credit profit or loss. So that profit or loss will have been credited, and that's a profit of $2,000 for that harvested, only the harvested portion. So what is now the fair value? This is the harvested portion. Start here. Let me say agriculture. Let me use the word agricultural produce, because that's what was harvested. So then we now still have biological assets remaining, because the biological assets is what has not been harvested yet. It's not been harvested yet. So we have fair value of let me say old units. Oh no, fair value of biological assets at the beginning. Let me use that word. Yeah, at the beginning is because it's 800 units now. Don't forget, 800 units, and the fair value was 120 times this. That is 96,000. Then what is the new fair value at the end, which is 31, 12, 23? Will be the same 800. Then what is the new market value? The new market value that we have here is this 130. So 130 is this. So there's also a profit. There's also a profit on remeasurements. I mean, subsequent measurement of the balanced biological assets. So you debit biological assets with 8,000 and you credit profit or loss. So that is the way we will record it. So the total profit or loss for the period is $10,000. So don't also forget that after the date of harvest, this agricultural produce that you have here, this agricultural produce, the value that we have in the books now is 26,000. That is the new value for the harvested unit. After this date, it becomes an inventory, and under IAS 2, an inventory is expected to be measured at lower of cost or net realizable value, and the difference is also posted with the profit or loss statement. So that is how IAS 41 agriculture can be treated in the books under both agricultural produce and biological assets. Thank you.